automated market makers, lending and borrowing protocols. These protocols work in a way that where they work with liquidity pools. Users often contribute assets to these liquidity pools in exchange for an interest-bearing token. So they earn interest on their contributions. In addition to that, the yield farming was sort of introduced this year, which is an interesting addition to additional way of seeking yield on Ethereum, in which governance tokens are issued to liquidity providers, and those tokens, while nominally don't having any monetary value, there is a great deal of demand for these tokens, and they've seen an increase in value in secondary markets. And what this allows you to do is they essentially vote on major changes to any of these DeFi protocols. And some of these are quite valuable because we've seen an exponential increase in DeFi engagement over the last year. Last year, just before this time in February, DeFi had about $1 billion of total value locked across the entire ecosystem. Now that's north of $12 billion, I believe. The last time I checked, it was north of $12 billion. So a small fraction of the overall financial market, but huge growth just in a short period of time. Well, I think that one of the things that we can kind of look at where Bitcoin and Ethereum sit in the overall digital asset ecosystem is Bitcoin is primarily viewed as a store of value. Now, Ethereum, the asset, has a lot of store of value qualities to it, but it also serves to run the applications across the Ethereum network. So what we're kind of seeing is, and there was an article in CoinDesk just today about the interest of institutionals in Ethereum because they see this exponential growth in DeFi. And while perhaps wanting to hedge against the direct risks of those particular protocols, they acknowledge the incredible value that's added by these protocols. And so holding Ethereum itself, the native asset to power these transactions on the Ethereum network, serves as sort of a hedge against that risk, while benefiting from the greater demand for the Ethereum token because of the increased interest in DeFi. I think the term infinite supply is misleading. Like I said, it works on a minimal viable issuance, meaning that yes, it will continue to issue Ethereum tokens will still be issued as long as the Ethereum blockchain exists and is up and running. But its issuance will gradually decrease over the course of time. It will only issue enough to incentivize validators to continue to secure the network. So that ensures the long-term viability of Ethereum. So Ethereum's scarcity is actually driven by its use rather than its issuance. So what will drive the price up, what will drive demand up, is actual value creation on the network. The more things that are built on Ethereum, the more demand there will be for the supply of Ethereum, and as issuance drops over time, that the value of Ethereum as a token should increase. Obviously, it depends on our ability to continue viable development and to increase activity on the network. So I think I touched on it a little bit. So value creation on Ethereum drives demand. So you need Ethereum to process any transaction on the Ethereum blockchain. that's what drives demand. Bitcoin doesn't have any inherent utility, so it requires that supply cap in order to retain its value. Without that, there's nothing inherent to Bitcoin that drives its demand. What drives demand on Ethereum is actual usage of the network for the building and executing transactions on these other applications. Okay. What we're seeing now is a lot of innovations in terms of cross-chain composability. There's a lot of, alongside Ethereum, there's also Ethereum-based chains and side chains to do all sorts of introduce augmented functionality and increasing transaction throughput so things move faster, cheaper with lower fees than on the Ethereum main chain. And so I think that what we're going to see is use cases popping up alongside other chains that are compatible with the Ethereum main chain that will allow new use cases to be introduced over the course of the next year. So I don't think that the world computer idea is entirely dead, but it's evolving to evolve these other cross-chain possibilities. Typically speaking, I don't like to speculate on actual prices, but I do see. I think it's entirely reasonable for us to be seeing this price, double by mid-year, if demand continues the way it has. So My Ether wallet is a non-custodial wallet solution that allows users to interact with Ethereum-based applications such as DeFi applications while maintaining custody of their assets. We have a number of different products that allow users to do this. We have a web-based product, which is our flagship product that was launched in 2015, just about a month after Ethereum itself launched to mainnet. We have a fully fledged mobile app that interacts with the web and has augmented functionality with the web. And we also have a browser extension. So we really give a whole host of key management options for users who want to maintain their own funds and interact with these different applications in a trustless and permissionless and privacy-oriented way.